Oliveboard. I hope you all are fine and doing well. A very good morning to all of you. Welcome here. So, in today's session, we are going to see CAIIB all-in-one Crash Plus Cracker. This is your BFM demo class in English medium, and this is for our June 2025 examination. So, we will see what will be our strategy and how we cover all the things, what will be the syllabus, and how to clear this exam, and some topics related to this BFM subject. So let's start, and before starting I am just introducing myself. My name is Aishwarya Sharma, and you can see the qualifications here. I have more than 5 years experience in teaching in both type of platform, like online and as well as offline. So with this, let's start with the class, with the session today. So you know that what is Bank Financial Management. BFM stands for Bank Financial Management, in which you will learn about international banking and what are the facilities are there for the exporters as well as importers, and so many things you are going to learn about banking in different sectors, how banks manages their risk, how bank manages their assets and liabilities, how banks manages their treasury. So most important thing is, first one of the main thing is, whenever we are going to prepare for anything, we must know that what is our syllabus, what we are going to learn in our syllabus. So here this is the subject that is covered in the CAIIB examination. This is conducted by IIBF, and everyone say that BFM is one of the typical subject, one of the hard subject, but no. If we have correct strategy, if we know that what to do, when to do, and how to do, so obviously we can score a good marks in this subject. So financial management, in this we learn that what is how to monitor the things, how to control the things, how to report the things. So that is financial management. And bank, where we like enjoy some services related to deposits, and they offer different types of services to their customers. Now if I talk about the modules in the BFM, there are 4 modules in the BFM. First module is international banking, second module is risk management, in which we are going to learn about the management of risk. Module C is treasury management, and module D is balance sheet management. All these modules are important, but A module and B module is more important. If I say the weightage, which module having the more weightage in the examination, so module A is having more weightage. So on priority, we must know all the concepts related to the module A, and in module A you will see some numericals, case studies, questions, and even questions without options. So that is all about module A. Then module B is all about risk management. After module A, I can say module B having the priority, and in this we will learn about different types of risk and how to manage these types of risk. Then module C is all about the treasury management, and module D is all about the balance sheet management. Easy module, the both module are easy, C and D, but you can't skip these modules. If you are preparing for A and B properly, and you are also doing C and D, so it is very good to cover all these 4 modules. Okay. Then let's start with the international banking. International banking, where we will learn about exchange rates and forex business, like what is foreign exchange, what is the definition of the foreign exchange, and what is market, what are the factors that basically determine the exchange rates, what is exchange rate mechanism, foreign exchange dealing room operations, derivative products, RBI, FEDAI, guidelines of these, and then foreign exchange, arithmetic concepts and principles. Then you will learn about here capital account transaction in the LRS. What is liberalized remittances scheme? Yes, here up to $50,000 is only approved by the RBI, that you can send money abroad, and also you can receive money up till this amount only for one financial year. And now some are the activities are there, like some permissible activities are there. You can invest into foreign also, or you can also use the money for these some activities only. Okay, so we are going to learn about these activities. There is tax collected source, like 7 up to 7 lakh there is no tax, but after 7 lakh there is a percentage of tax. Okay, and in this you will learn the things related to the current account transaction, capital account transaction. Then third chapter is all about correspondent banking. What is correspondent banking? Basically, when one bank is in India and the customers of this bank is in different country where the bank is not having any type of branch, so bank will do agreement with the bank that is situated in that country. They are making the agreement, and then that country bank will act as the like correspondent banking, doing the we can say giving the services on the behalf of the other bank which is in the India. That is correspondent banking. In this you are going to learn about nostro, vostro, loro, mirror account, and there are different types of electronic modes of payment. One of the most famous is Swift, CHAP, CHIPS, RTGS and NEFT are of India. And what are the facilities that are available to the NRI? What are the different accounts which are available for the NRIs, so they can operate these accounts easily, and how much limit is there they can keep in their accounts? What are the housing loans to the non-resident Indians? So these are the things you are going to learn. Very interesting chapter, having some numericals. No, numericals we can't say. Case studies are there in this chapter. So this chapter is very interesting and very useful for our examination. The next chapter is documentary letter of credit, LC. LC, what is documentary letter of credit? Now, documentary letter of credit, like a agreement, a type of a trust between buyer and seller, so they can easily do their business. There are types of letter of credit. There are irrevocable, revocable, green letter of credit, red letter of credit. Different types of letter of credit are there. There is UCPDC, there is URR 725, Incoterms, which are very important, and all these things are there which is important for our examination, and the questions will be there in the examination from these topics. Okay, then next is facilities for the exporters and the importers. Now exporters and importers are there. How they do their business? For their smooth transaction, for their smooth operations, there are some facilities which are available for the exporters as well as for the importers. And there are two types of portals are also there: EDPMS, which is for exporters, IDPMS, which is for their importers. And in this like there are some case study on the export finance, even what is gold card scheme, what is the meaning of export finance, and what is factoring, forfeiting, the most important topic you are going to learn in this chapter. Some are the facilities which are available to all the exporters and importers, which is important for their business operations. Then ECB is a type of loan. ECB is a type of loan and basically important chapter. This is also an important chapter. In this you will learn about some type of prohibited sector, NDI rules, list of documents and eligible foreign investors, ECBs, other operational concepts and foreign investments in the India. You are going to learn in this chapter. Risk in foreign trade and role of ECGC. Now in this chapter, different types of risk you are going to learn. You are going to learn about the ECGC role, what are the policy of ECGC, some of the common points like to do points under ECGC policies, what are claims, guarantees, you are going to learn in this chapter. Then you are going to learn about the role of Exim Bank. Exim Bank, what is the Exim Bank role, functions and the facilities, RBI, FEMA, FEDAI, GDR and ADR, American Depository Receipt, Global Depository Receipt. These are both like siblings type of things. And what are the regulations of the FEDAI, what are the regulations of the RBI, what is the exchange control in India. Then IFSC, gift city is in Gujarat. Basically you are going to learn why banks set these IFSCs and what is the role of these, what is gift city, why this gift city is set up. Then what are the technology used in international banking, and with this you will learn about digitalization. Digitalization means like you are seeing that today we are doing payment with the help of GPay, PhonePe and Paytm. These types of things you are going to learn. And the most important thing is fintech. You will learn about the journey of fintech. And in India there is blockchain technology. All over the world there is blockchain technology. What is blockchain technology? According to the manual process, what is the difference between manually and with the help of blockchain technology? Will see the difference. So this is module A. Now how we are going to prepare this module A? Are we going to learn everything in this course? So I am telling you here the module A strategy. See, we are going to learn the concepts, important concepts of every chapter. Okay, first we are going to learn about the concepts. Then we will see here the most important MCQs on these chapters. First we will cover the concept, then we will see the MCQ. So this will help you in recognizing that where is your actual weakness and where is the problem you are facing. Okay. Okay. Then next is our module B. And this module is all about risk management. What is risk? What is the linkages? This is important. Why risk is need to be managed, and some basic risk management framework. Then you will learn about the trading book, banking book, off balance sheet exposure, bank risk definitions, identification in the banking business. Important chapter. Then this is one of the most important chapter. In this you will learn about different pillars: Basel 1 Accord, Basel 2 Accord, Basel 3, and then you will learn about all the three pillars. This is, we can say, an important chapter. Then after this there is market risk. Market risk, where you will see the concept of market risk. What is market risk? Market risk is when there is loss due to market factors, unfavorable market factors. The situation is there of loss. This is called market risk. Okay. Credit risk, when the bank is giving the loan to the borrower, but borrower failed to repay the loan. Borrower will fail to repay the loan. That is called credit risk. Okay. Then operational risk is happened due to the people error and software error. personal error like fraud, theft are is there, and external error which is not in the control of the bank. So you are going to learn in this operational risk. Then there is liquidity risk management. Liquidity risk management, in this chapter you are going to learn about how to manage risk, how to manage cash when there is shortage of cash, and we are like banks are unable to meet their fulfill their obligations. That is called liquidity risk management. Then Basel 3 framework, in this two important ratios are there, LCR and NSFR. Then introduction to the treasury management, in this different chapters are there. So basically C and D module having low priority comparison to the A and B module. In this you have to master the syllabus first, and most important thing is self study. Just go through with the notes, and this is not possible that if you are preparing with the right strategy, so you will not clear the exam. If you this is not possible. If you having the clear strategy, you know that what is the concept, what will be the things, so obviously you are going to crack this exam. Okay, but most important is their self study plus a proper timetable. Follow all the notes which I am going to provide you. I will provide the notes in very easy language, so you can quickly revise them, you can easily access them, and with the help of notes there is no requirement of any other resource. I will provide the most important thing in the notes. You can go through with the notes, you can prepare the things according to yourself. Try to give mocks as much as you can give. Try to give solve the MCQ as much as you can solve the MCQs, because it helps in boosting your confidence. And this is the last minute type of strategies. Self study timetable, like you have to manage your professional and personal life. You have to make your you can revise notes, not don't make your notes. And most important thing is case studies. Just try to solve case studies, how to solve the case studies, how to tackle with the case studies, how to learn to solving the case studies. Then some numericals, you must know the formulas, right? You know that how we can solve the things. These are the things we can easily, with the help of these things, we can crack the exam. So this is the strategy. Now yeah, if you can dream it, so you can achieve it. You have to be confident. Like if you already cleared JIIB, okay, you already cracked the competition bank exam, so CAIIB BFM is not a big deal. You can do it. Okay, so just with the good strategy you can do it. There is no rocket science. Very easy concepts are there. Just a right strategy will help you in cracking your this exam. So this module is having the great weightage. Then module B, and don't skip these two modules. And then now just learn, I am telling you here about definition of NRI. Just quickly we can revise this concept, we can learn about this concept. Most important thing, we must know who are NRIs. Okay, there are two definition of NRI. One is according to the Income Tax Act, second is according to the FEMA. So first we are going to learn about the Income Tax Act. According to Income Tax Act, section 6, what is NRI? Who are NRI? A individual who is considered the resident of India. Just give concentration on the words. This person is suppose X. X is considered resident of India if this person stays in India at least 182 days in India in the last financial year. Okay, last financial year, we can say in the last financial year this person is staying for at least 182 days in the India. Now which financial year is going on? 2025 is there, so 2024 to 25 is there, so 2023 to 24 is the last financial year. Then first condition, either this condition is fulfilled by Mr. X. Second condition is this person lives at least 365 days in the India in the last 4 financial year. Okay, and 60 days in the most recent financial year. So 4 financial years are there, total 365 days, but in the last recent one 60 days mandatory. So we can say Mr. X is Indian resident. But if Mr. X is not fulfilling any condition, that Mr. X considered as NRI. Clear? This is the definition according to the Income Tax Act section 6. This is the definition of NRI. Clear? Now some changes are there which is effective from 1st of April 2020. If a person who is living in the India for at least 120 days during the previous financial year, last financial year, previously this limit is 182, now it is 120 days, and has stayed in India for at least 365 days in the 4 financial year, or if this person is earning more than 15 lakh, so that person is considered as resident for the tax purposes, or their income will be taxed accordingly. What I am saying, if a person who is living in the India for 182 days in the 120 days in the last financial year and at least 365 days in the last 4 years, so that person is considered taxable, income is taxable if he is earning or she is earning more than 15 lakh. Okay. Okay. One more concept is there, RNOR. See, these terms are very important when we are going to learn, when we are going to solve case studies. These types of concepts are very important. RNOR, for the tax purposes, a person is treated as RNOR. Why? If that person is outside India for 9 years out of 10 years, then that person is RNOR. Or this person is only stayed for 730 days in the last 7 years, that person is considered as resident but not ordinary resident. Clear? For the tax purposes I am telling you. Okay. Then what is deemed resident? A deemed resident is a NRI. Who is having the following criteria, who is fulfilling the following criteria: Indian citizenship, they must have Indian citizenship, they do not qualify any type of tax resident for any other country. Okay, they are earning more than 15 lakh from only Indian sources. Okay, so they are considered as deemed resident. Okay, now this is all about, I told you about the tax, income tax. Now the NRI, according to the FEMA Act, Foreign Exchange Management Act 1999, under FEMA, a citizen who is moving abroad for job, business, and don't know when that person will come back to India. That person moves abroad for indefinite period and staying outside India. That is, we can say, NRI according to the FEMA. Any person is having job, who is doing job with government, with international organizations like World Bank, IMF, and United Nations. That person, FEMA is saying NRI. That person is NRI. Any person who is living abroad doing business in government official or sending abroad for just completing the project inside for some type of assignments by the government, so that person is considered as NRI. Okay, so if I say according to the uh, uh, income tax act, they have to fulfill these conditions, two conditions, either one condition they have to fulfill. And for the FEMA Act, if they are living abroad, they don't have any type of intention when they are come back, no definite period is there, so they are a resident, or they are working with some government official, so they are non-resident according to the FEMA. Now one more important term is there, person of Indian origin. Okay, person of Indian origin is someone who is not an Indian citizen but having one of the following condition. They once were Indian citizen in their life according to the Citizen Act. They belong to the territory which become a part of India after August 15, 1947. Or their grandchild, child, great grandchild of Indian citizen. Or their spouse of someone who is listed here. So NRI simply is that person who is living outside India and outside like have that person having the Indian citizenship, Indian nationality, but living outside India. Okay, and no fixed return is there for that person for return. So that is NRI. Okay, so overseas corporate bodies means overseas company, trust or firm that is owned by NRIs. A body, a organization is considered as OCB if that is having 60% of its ownership. Must be held by an one or more NRI. Okay, so this is the things. I hope that it helps you in understanding the things. So that will be the strategy. First we will covering all the concepts, then we will see all the MCQs and some case studies and appropriate numericals. Okay, so this is it from my side. I hope that it helps. So see you all in the classes. Thank you for giving your time. If you have any type of doubt, just go and do the comment. If you like this video session, just give a like, subscribe to the channel. Thank you. Let's see you all in the classes, and till then take care and thank you.